Good afternoon, everyone. Today we're gonna talk about your credit and you, why it's so important to have your credit, even though it's not the only parameter used by banks to qualify uh, your risk. Is something that it's really helpful to have an understanding on how the credit bureaus qualify those credits. So one of the things that I want to talk to you before we start the presentation is UCEDC. We partner with the Cherry Hill Public Library in order to provide this service. UCDC is a private nonprofit located in Cranford, New Jersey. We have been working with small business for about 40 years now. We're a community development financial institution. We work directly with the SBA, providing funding for the public. And this funding is just for corporation, for businesses itself. So we focus on helping the community build, increase their quality of life through businesses. And we have three different lines of services. We have the loans, the lending department. We have training, that's the one that I'm part of, and we have PTAC, government procurement and technical assistance center. So let's get started right away with lending. If you're gonna request a loan, it's really good that you know where to go. There's a lot of organizations that can provide you funding, including if you have a good relation with your bank. That's the first step to go. The first part you should go is through your bank. You have to analyze all the things that the SBA is offering for microloans up to $50,000. If you're just thinking about launching a business, we can provide up to $25,000 for startups. For the community advantage loan, there's the SBA 7A community program. We provide loans between $50,000 and $250,000, and the interest rate is prime plus 1, 2, or 3 points. One of the best programs that we have out there is the 504 commercial real estate program. What that means is out of the 100% of the money you need for buying commercial real estate or equipment, we will partnership with a commercial bank. The bank will take care of 50% of that loan. We will take care of 40%, and you will only put down 10%. The beauty of this is exactly that. You will be putting down less than if you go to a bank. Usually it's 30%, can be up to 30%. So we request 10% down, and that's almost nothing in large businesses. So it's something that you want to consider. Other than that, as I was saying, I'm part of the training department. We have training and technical assistant program. We do free workshops. We have a series of business basics that we provide for anyone. You can go to our website and take a look at all the videos that we have, past webinars. We have recordings of those. Entrepreneur training courses, we have one of those. We have one series coming in Hudson County. If you want to participate, there are 7 classes. I invite you, please take a look at our website. It's really informative and it's good for your business. Business mentoring, one-on-one counseling. We offer this for our loan clients. But if you don't know where to start, send us an email. We'll be happy to help you out. Make introductions for you with other organizations that provide business counseling for free. Remember, the key part here is that most of these programs are free. And the special programs, we have one program that's Entrepreneur as a Second Chance. This is for reentry population, anyone that has been incarcerated, that wants to start their own business, we can help you out with that. Virtual Incubator Program. This program specifically was designed for people that are part of minorities, that are LGBTQ+. We know how hard the COVID-19 crisis has affected their business. So we created this program, and the whole idea of this program is that at the end of 7 classes, we provide funding at little cost to you. And that's the beauty of those programs. So if you know anyone, please let us know, and visit our website, ucdc.com, and apply for these endeavors, okay? Thank you. Now, the PTAC one of the things that I always say to small businesses is that you have to increase the channel, the distribution channel, the lines of services, and one way is doing that through the government contracting program. That's PTAC. I think that there are a lot of different PTACs through US. There are several in New Jersey. So one of the things that we offer is free seminars, one-on-one counseling, registrations or certifications. Beautiful things that we offer you is marketing to purchasing agents, identify leads. So our team can identify leads and let you know, hey, this is going on. Maybe your interest. Proposal development. They will not touch the proposal, but you can send it to them, and they can say, "Hey, this is a good proposal. This is a strong proposal. You have to change X, Y, Z, or everything's fine." So that's a beautiful thing to do. Regulations and military specifications. You want to know that subcontracting assistance and GSA. That's something that you want to do. For today, we're gonna work on the following objective. Describe how to read a credit report. Identify what makes up a credit score. Provide tips for improving your score. Discuss who uses credit scores and why. Dispel credit score myths. And the first thing is that if you know how your credit score is calculated, if you know how to use your credit report, this actually can become, instead of a liability, it can be a strength, something that can actually become an asset to you. And if it's an asset, it can produce a lot of benefit at the end of the day. So what we want to you is that you have the knowledge and you know how to access these products, and these credit strengths can generate actions. If you want to improve your credit score, you will have the tools, or you will know where to start in order to change the position you have at the moment. And this is something that we see a lot of times. People they don't have a clear understanding on how their credit is calculated, or they think it's, they don't want to get, they were in a household, they have a lot of debt. So when they're out of that household, they don't want to have any kind of debt. So they don't have credit cards or anything, and they try to do everything with cash. What happens is that they're not gonna have credit, and that can affect their interest rates, how renters, how employers look at them. So it's really important that you establish a good credit for yourself, and this can become an asset as if you have a really good credit score and a credit report. At the end of the day, you are gonna pay less interest rates for the same amount of money you will be having with you will be paying if you had a lower interest rate, a lower credit score. So this is really important. And the most important part, we always say, your credit can empower you, can give you a lot of things. You can access more product, more services with this. A lot of things is that landlords run this, the credit report. If you have a really bad credit score associated with your credit report, this will be a red flag for them, because they don't want to sign a lease if they know they may have a payment issues in the future, because that's going to be expensive for them at the end of the day. So they want to limit their liability, and the way they can do it is by having people, renting to people that have a good credit score and that have shown their the serious about their credit, and have a good standing on that part. These are the things that the different components of a credit report. Your personal identification information, the credit history, public records, increase. So there are two things that are completely separate, they're related but are separate. It's the credit report and the credit score. When you think about credit score, think about a picture as a picture, a snapshot at some point in time. They take a picture. That picture can change for the better or worse in a couple of months. So that will only show the risk assessment. Is a risk assessment used by banks and other commercial entities to know how risky is to you to give you a loan. That's it. Nothing else. It doesn't say if you're good or that. It just says how risky is to give you money. And the credit report is all the transactions. It has all the transactions that are used to determine that score. So that's why it's so important that you identify that you have when you run your credit report, all the transactions that you have under your name are yours. Those are your transactions. So you want to have a clear understanding of personal identification information. It's you. All the credit history is there. The public records are there, and inquiries are there. And let's talk about all of those personal information. So this is gonna be all the names. For example, sorry, full name, date of birth, social security number, current and past employers. Um, it will also include alias. So if, for example, if you had a credit card um, on your name, but they need your last name or something like that, that they may spell your first name, that credit card is yours, but they use all your information, but somebody put your name in with they misspelled your first name. That will become an alias, and that will be associated with your personal identification information. Sometimes that happens. I've seen a lot of times, especially when you request a credit card. Usually it happens there. Credit history includes open, active, and inactive trade lines and the derogatory information such as collections accounts. Really important here is to know if you have collections accounts, if you have any account associated with collection that was a federal loan, like student loans, the SBA will not give you funding. So it's really important you know that, because remember the funding from the SBA is focused on small business owners, people that they don't have access to banking. So it's really important that you don't have any derogatory information there or any collections information on those accounts. Public records, anything that's public, for example, one of the biggest ones is bankruptcies. Bankruptcies will stay in your credit report up to 7 years. It doesn't mean that a bank will not give you a loan there. They might be able to give you a loan, but it's going to be a riskier loan for them, so the interest rate will be high. So it's really important that you know that if you go and have a bankruptcy, this will become an issue later on for you. And there are two kinds of inquiries. Inquiries usually are when you're going to buy a large asset, let's say a vehicle, you're buying a car or real estate. They will run your credit report, and that's a hard inquiry. When you show interest on buying a car, the car dealership will run the reports, and that information just to find you, for example, uh, who can give you a loan and the best interest rates for that loan for that specific vehicle. So it's really important that you know that. Soft inquiries, for example, if you want to run your report, if you need help with that, we can run a soft inquiry for you. And that will allow us to know where are you right now. It doesn't affect your credit report. The other one, the hard inquiry, will affect your credit report, but the soft inquiry is just for educational purposes, so it won't affect that. Okay, and there's a whole universe of credit scores. So um, it can be from 400 to 800 points and everything in between. Now banks, because of the financial crisis, of the economic meltdown because of the COVID-19 crisis, and they're looking, before last year at the beginning we were looking at 650 more likely to get a loan. Now it's 680 in most banks just to get a loan. It doesn't matter if it's a CDFI or we work with the SBA. We are always looking at good borrowers. We're always looking at people that we know they have the capacity to pay. So this is something that will help us understand that. No, not so much the credit score, but the credit report will tell us a lot of information we need to understand. And this is really important. Every single business is different. If you have, for example, a restaurant, your risk is higher than, I don't know, a car dealership can be higher because it's it's a really tough business right now, right? So if you have a restaurant, maybe the risk assessment of that industry is going to be different than other industries. So it's really important that if you have uh, information about your credit score for your business, you compare that credit score with the industry standards. What's the average credit score for your industry? You don't compare it to individual, to your own. You don't compare it to other industries. You want to know how that industry looks because everything is different. It depends if your service or products, the risk can be different, and that can be, for example, in one industry, 670 is a really good credit score. In another one, it can be a really bad one. So it's really important that you compare to your industry where you are with that information. Okay. And these are things that you wanna identify with a really strong credit profile. The payment history, you have all the payments on time. You don't have delinquencies within most recent 6 months, and no serious delinquencies in history. This means, for example, sometimes people have a credit card and they forgot to pay 1 month, and they paid it, and that's it. So it's not, it doesn't show the character of the borrower. It only shows that it was just a mistake and that's it. And we're human, so things like this can happen. There's no issue about it, but it's really important that we identify those kind of things. Uh, Late days between 30 or 60 days. If you see once or twice here and there, it's fine. But if you see on the payment history from a board, from a lender side, if you see every single month that person is late 20, 40 days, 50 days, and they paid, and then it becomes a trend again, that's a red flag for us. Outstanding debt, maximum of multiple revolving credits, is under 10% of revolving credit. We say like 30%, it's fine, but you don't want to see like max out on your credit cards all the time. Because if you're max out on your credit cards, you want to see the payment. And in the credit report, you can see the average payment for that account. And if you see they're only paying the minimum payment, then it can become an issue of capacity. You may not have the capacity to pay. So it's really important that you show that you have capacity, that even though you have credit, you're not exceeding your credit. So if you can have your credit below 30%, that's the best way to go around that. For example, really bad single account max out. All revolving accounts keep balances very low. That's about 30%. Length of credit, long history on file. And most likely, the easiest way to have long history on file, I will say, is to have a credit cards from department stores. For example, I know a lot of people that have a Macy credit card and they have it, I don't know, since 1992, something like that. It's been more than 20 years with that credit card. So if you have a credit card like that, use it once in a while because that will help you um, when you're getting a loan. Because once you see, for example, you have an established account with one vendor for so long and you have never been late, that you have been using every couple of months, that shows that a lot of commitment from your part, and that is a really strength that you want to show when you're going into to finding a loan for yourself. So that's important. Increase. Many increase through the past year. This is not so important depending on what kind of increase were. For example, when you go and buy a car, for example, sometimes we see that one person goes to several car dealerships in the same amount of time, let's say 1 to 2 weeks. You can go to 18 or 12. Of course, if you're interested, they're gonna run your report. But because it's in the same amount of time, I'm receiving Amber Alert on my phone from New Jersey. Sorry about that. Um, because because you're running so many, the person is going to buy a car in different dealerships. Every dealership is running that report, but when you see it from a bank point of view, you will see that everything is related to the same type of assets that you want to buy, for example car or something like that. Then you will say, oh, it's basically the same. Even if it's 12, you can say, oh, it's only one. So it's not a problem there. The problem becomes that it's things are completely different. They're not associated with the past. They become different, and that will affect your credit report. That can take 20 points out of your report every time you run it. So you want to be strategic on how you run it. If you're gonna buy a car, go to several car dealerships on the same period of time. So when they run it, a lot of inquiries are going to appear, but it will only account as one inquiry. So it won't take all those inquiries won't take a lot of points out of your credit score. So that's important. Credit mix. So only one type of account on record, different types of accounts. So what you want to see is that you don't have only, for example, credit card, revolving credit, but you have an installment, for example, a car payment. So when you compare different type of assets that you have, that first of all, you may have some equity at the end of the day on those things that you're buying. Second of all, you're not only showing that you are buying uh, perishable assets, things that you buy them and they will lose value right away, but you're building something for yourself. So it's really important to show that part on the credit mix. And this is 100% of the score uh, is built in this way. 30% is all the money that you own. So that's why it's so important you have a long relation with banks. So you can show, for example, in 20 years, you have about 30 or 20% use of that credit card. That's really important. Payment history. Payment history is everything if you have been late 30, 60 days, derogatory accounts, um, collections, all of that will show here. Length of credit will be associated with amounts owned, and on the way I told you, if you have something like a long relation with Macy's or a department store, you want to keep that because that's 15% of all the credit is calculated on the length of that relation, basically. Type of credit use 10%, and this is the mix: credit cards, student loans, mortgages, etc. They're gonna be here, and as I told you, you want to have a different mix, and a lot of the mixes on the credit that you have there, just because if you have that, first of all, you're building, and it's not only a consumer loan, but you're building um, equity on your home, on your business. So it's good. And that will help you also. A new credit is going to be 10%. How much of your available credit is new? So all of that will give you a credit score. And if you can see, this is basically there. We're trying to calculate if you have capacity to repay new loans at the end of the day, and how much, depending on your position in each of these items, will affect the interest rate that you will be paying at the end of the day. Remember, the interest rates will go down if your credit score is really high and if you have capacity. It's not only related to credit score. Capacity is really important here. And there's a way you can access your credit score. So basically, you can go to annualcreditreport.com, and you can actually, using this link, you can run the 3 reports once a year from TransUnion, Equifax, and Experian. And the really great part here is that it will only give you the credit report. You don't have the credit score in these ones when you go to annualcreditreport.com. You will have to pay, I think, like $10 to get the score, but you will have a really good understanding and idea of where it's gonna be. And if you use Credit Karma, it's gonna be Credit Karma is always 10 to 15 points above or below the real score. So you can calculate it really easy. So you don't need to pay it. If you're really interested in doing this, well, you can do it. But the important part here is that you can see if all the transactions that appear on your credit report are yours. And if not, then you can dispute them. If you want to dispute them, you can contact me at the end of the presentations. There's going to be some my contact information, and I will send you the letters that you can use. Basically, some templates of the letters for TransUnion, Equifax, and Experience that you can send them just to dispute those accounts. Remember, if you have a really common name, some accounts from other person with that name can appear under your credit report. And it's really important that you have a good understanding of this, okay? Okay, and there's another one. A couple of years ago, Equifax had a security breach. They lost about 180 million social security numbers in US. So what they did is that they say, you know what, because of that, we're gonna give you until 2026 access to your credit report for free. And there's gonna be help you manage that credit report so you can access that for free. And that's gonna be the credit score, credit report, and the credit scores, everything in one solution. So here is the link. It's Equifax.com personal credit report services, free credit reports. Use that and you can be able to get that information too. Well, things that are not part of the credit scores, for example, credit reports, for example, mortgage status, education level, those things are not going to be there. Other things that are not going to be is race, religion. They're not part of the credit report or credit score. Okay, so they're just basing this on your credit history, on all the financial information they can collect with banks and borrowers, so they can build this. If you bought something on your name with a credit card or with credit, you will be in the database already, and you should be able to have access to credit report and a credit score. So these are things that you want to keep in mind. The credit score, gold borrowers, 720. If you're in 720 points, this is the sweet spot. This will be great for you. Exceptional, 800 to 850. For example, my wife, it's 812. She gets offers all the time. I think that dealership call her 0% financing for 6 years, for example. Those are the kind of perks that you get when you're like exceptional credit score, and that's what you want to have. Gold borrowers, you will have great interest rates in this level, 680 banking threshold for small businesses. This is what I was telling you before. It was 650, now 680, 600 to 650 may have pay higher interest rates. I will say with UCEDC, we might look at the whole thing, at the whole picture. And even if you don't have 680, but we know you have a solid business plan, or you're doing everything you have to do to improve it, and you're doing a really good job on your business, we might be able to help you out. So it's really important then to know that. 500 to 599, serious credit issues, and below 500, severe credit issues. I will say everything between below 600 is really hard. You can get loans, but the interest rates are gonna be too high, and at the end of the day, you're gonna pay more for the same amount of money that someone with a credit of 680 or 720 will pay if they have a lending need of $10,000. From you can pay thousands and thousands of dollars more at the end of the year, at the end of the loan, because it's amazing how 1% on the interest rate will affect you financially speaking. So it's really important that you know that. Pamela, do you have any questions? I'm doing basically this for you. I'm not recording, so you have to unmute yourself.
No questions so far, but the
Okay.
information is good.
Yeah, okay. So remember, have you used annual credit report before or no?
Well, yeah, I've gotten credit reports before.
But have you used this website, annualcreditreport.com?
Yes, I get it
Okay.
every year.
Okay, good. One thing that you might want to do is, instead of running the 3 reports right away, you can run in like every one, like each from 3 to 4 months, so you cover the whole year and you can see what's going on your credit report through the whole year, not just one snapshot in that year. You know what I mean? Like,
Oh, they spread it out.
yeah, spread out. That will be good. And the other one is the Equifax.com personal credit report. That's 6 times a year, and I think that can also help you a lot.
Okay, thanks a lot.
Okay, good. So now things that we have seen a lot is landlords. Landlords are using credit report and credit score, not only to know, for example, your credit score itself, but to know if you have issues before paying rent or anything like that. So they're running a lot of these reports now. So you want to be careful about your credit report, credit score. Keep it really good if you're gonna be a renter, because landlords are, everyone is jumping into the train to ask for this information. Okay, lenders, every single lender will request this information. No way, there's no way around this. You, everyone will request this information. What happens is, depending on the risk assessment of the bank, or organization that you're asking this money, they will come back to you saying yes, no, this is how much we can give you. So it's really important that you have a really good understanding of your financial needs, of your capitalization requirements before you go to a lender and run your credit report, just to make sure that you're in a good position to go to a lender and start this process. Okay. Employers and potential employers. Why? I know cases that people um, that just apply for a bank positions. For example, if you go to a bank, apply to a bank, and your credit score, credit report are really bad, why someone will be giving you money if you're really bad at money? You know what I mean? So it's that kind of things happen a lot. So it's really important to do that. And if they need, for example, someone that's um, right hand person, for example, they need a lot of to have a lot of confidence in one person. If you are in debt to your neck, that's going to be hard, so that can affect you. Insurance companies, they run this all the time because it's risk assessment. Remember, insurance is the business of liabilities and risk. The lower the risk, the lower the liability, the better for them. If you have uh, a really low score, that's a really big liability. for them to happen. So that will affect the final price that you will get for an insurance. Okay. I want to show you a credit report. Basically, this is one from Experian. So one thing that you always want to make sure is this part, the first part, all your personal information is correct. One thing that can happen is that here on the bottom, it appears something that says alias, and that's because maybe sometimes someone put your number wrong in a credit card when you apply, and that happens a lot. Even if it's yours, maybe it appears with a different name. For example, my last name is Hincapi Cruz, but most of the times people just shop Hincapi in a really bad way, and I'm appear in different credit cards like Hincapi as my first name, Alejandro as my surname. So it's confusing, and I have a lot of alias because of that. So but it's me, so it's fine. But you wanna be sure that that's yourself, that you have that. Here we have all the potential negative information. So this will be if you have collections, all that information will appear here. It will be appearing the name of the company that say hey, you didn't pay me, when was that, the amount that you own them. That information will appear there. All the public records also will appear here, and that's more likely related to to bankruptcies. So it will say when the bankruptcy was, how much money, everything on file on that bankruptcy. So that will appear for 7 years from the moment you announce the bankruptcy. Okay, and all the other part is going to be the transactions information. So you will see something like this in all of them, from the date you open, the type, credit limit, uh, terms, payments, late reported, and here you will see some boxes that say 30, 60, 90 days, 180, and if it says 1, 2 on those boxes are check mark. It means that you once or twice you were late on those payments. So it's really important that you were up to date on that information. And here, accounts in good standing, it will only show us accounts that you're fine with it. And the type, of course, is what was that? Request for your credit history. So all the things that I was telling you, the increase will be appearing here, soft increase, hard increase, all those increases will appear here. And those increases will tell us, for example, if you request a loan, or you were looking into buying a car, a home, all those type of the codes will tell us what were you trying to do. So it's really important that you keep that as a minimum. If you're gonna buy a home, try in a small period of time, go to several banks, try to do all of that in the same, let's say 15 days, 2 weeks, or 3 weeks, so that all appears as just one transaction. Okay. um, as I said, personal information again, everything from uh, address, late address. Sometimes it says employers. All of that information will be there, and that's all the things for your personal financial statements. That's it. And that's all. But remember, a lot of times that this is the information that will appear on your credit report. But one of the things is that we get a lot of questions is, oh, how many credits should I have then? And there's no a correct number of credit cards. You can have several credit cards. Is how you manage the credit cards what's really important. You want to have cards that show a lot of history, payments, a lot of that. You also want credit cards that have lower interest rates and no fees. So you want to be strategic on how you use them, just to get the fees down, or no fees. Or if you travel a lot, maybe you want a specific credit card, or or you want a specific product. You want to be strategic. But the most important part here is that there's no correct answer of 2, 1, 3, 8, 6. That is not a correct answer. The most important part here is know how to use them. And at the end of the day, the thing that you want at the end is to pay really low interest rates for for that money that you're using. That's the most important part. Credit myths, checking credit reports lower your scores. Now, if you use soft inquiries, it will not hurt your credit score. You can use Credit Karma. That's a free service. You can do it every single time. I know a lot of banks now offer that service, and it's a free service. It will not affect you. So use those. You only have one credit report. No, you have from the three bureaus, you have each of them has a credit report. Some of them they may have the same information or uh, little different here and there, but it shouldn't be a problem there. So you want to check all of them. The higher your salary, the higher your score. No, I have seen people that make more than $100,000, and the credit score and credit report are horrible. It's all on how you use your credit. Once again, how strategic you are, and how you make your credit report an asset instead of a liability. Paying of debt will immediately raise your score. Now, if you pay your debt, that's a good sign that you're gonna do. But remember, this is showing the history. This is showing a trend. If you only do this and you go back and have an debt, then what's the point? If you pay your debt and you continue changing how the relation you have with your credit cards or with your credit, then it will start affecting because it has to show a period of time in which they see a trend on how you use your credit. So that's the most important part. Credit card offers can hurt your score. Now, is be strategic on how you use those offers. On what offers are you gonna be working with? That's the most important part. Can you change your credit score? Yes, and that's why you're here, Pamela. You can change your credit score. You can improve your credit score. It can take up a couple of months. It's not gonna be 1 week to another, but I will say I've seen people raising their scores in from 4 to 6 months if they do the correct thing. I think that's all I have, but are there any questions?
No questions, but
Oh,
just thank you for the excellent seminar.
no, thank you so much for being here. I know we started a little late, so a lot of people were not able to jump or thought that we were not going to have it. But thank you so much for being here, sticking with us. And if you need any help, please let us know. We'll be happy to help you out. Okay. Okay, now I think that's it for today. Here is my contact information. I'm Alejandro Cruz from UCEDC. Once again, my contact information is acruz@ucedc.com. You can also go to our website, ucedc.com, and just request one-on-one counseling, and we go from there. If you need lending, let us know. We'll be happy to help you out. And just apply on the lending link of our website, and we can help you out, I think. So that's all I have. Once again, thank you so much. Have a great day.